Hello, my name is Dr. Jeff Hong, the coordinator of the finance program here at BMCC, City University of New York. And I'll be your professor for the course of Finance 100, Principles of Finance. It's quite likely that your interest in this course stems from a curiosity about stocks and bonds. While finance encompasses more than just investing in these financial instruments, they often capture the interest of many in the field. To truly understand investing, it is crucial to delve into the foundational knowledge necessary for sound judgment regarding the movements of financial assets in the market. This involves areas such as financial mathematics, financial accounting or fundamentals, macroeconomics, market momentum, and more. If you've been keeping an eye on the financial market, you may recall its thriving state in 2021. Despite a brief setback due to supply-side disruptions at the onset of the pandemic. The S&P 500 index reached a historical high of 4,700 level by December 2021. Subsequently, with the outbreak of the Russo-Ukraine war, there was another brief slowdown, although it didn't significantly impede the U.S. economy. Both events, while not directly tied to the economy per se, had an impact on the financial market. The pandemic, a global event, affected production capacity and supply chain, while the war, a geopolitical event, influenced the distribution network of natural resources. The market continued to perform well into early 2022, thanks to substantial fiscal and reshoring policies aimed at strengthening the U.S. manufacturing base, such as Inflation Reduction Act and Infrastructure Investment and Jobs Act, during the early years of the Biden administration. However, in 2022, we began hearing about soaring inflation and the Federal Reserve's quantitative tightening measures to rein in the inflation, continuing through 2022 and 2023. To the surprise of many economists and finance professionals, there was the Silicon Valley Bank crisis, and the economy navigated through a few episodes of regional bank crisis, which were fortunately tamed early on. Concerns about the yield curve inversion and snarling fear of impending recession followed. In addition to the foundational knowledge mentioned earlier, there are numerous ad hoc macroeconomic and non-economic events that impact the financial market. Investing in financial assets can feel like a daily walk on a tightrope in such an ever-changing and volatile macroeconomic landscape. In this environment, the demand for acute knowledge, intellect, skills, and the ability to analyze a vast range of information becomes paramount to protect your financial stake. This is why the study of finance is not just about learning. It's about a deeper exploration for insights. And that's what we aim to achieve in this course. Welcome aboard, and let's enjoy the ride.